Intuitive Surgical makes 67% gross margin selling robots that cut into human bodies. Its stock is worth 4 times the world's largest industrial robot maker, whose robot division revenue just fell 16%. A warehouse startup with 84% of revenue from a single customer is worth $38 billion. And Tesla says it will ship 50,000 humanoid robots this year, from a business that has earned exactly zero. This is robotics, a $100 billion industry where one segment prints money, another is in cyclical decline, and the hottest category has no proven economics. Your return depends entirely on which segment you buy. 3 questions this episode answers. First, why does a surgical robot company trade at 4 times the market cap of the world's largest industrial robot maker? Second, which of the 7 US listed robotics plays actually captures the next decade of automation and which are priced for a future that may not arrive? Third, humanoid robots are valued at $39 billion in private markets. Is there a way to play this from public equities? Let's start with the market. The global robotics market spans over $100 billion across industrial, surgical, and service segments. Industrial robots, 542,000 units installed in 2024, an all-time high. 4.7 million robots now operate in factories worldwide. Market value of new installations, $16.5 billion. Surgical robots, a $13 to $14 billion segment growing at 15% a year. Dominated by one company. Collaborative robots, cobots, are a $3 to $5 billion subsegment growing at 25% annually. And Goldman Sachs projects humanoid robots as a $38 billion market by 2035, up 6 times from its prior estimate. One number tells the whole story of where the growth is. China installed 295,000 industrial robots in 2024, 54% of the global total. More than Japan, the US, Korea, and Germany combined. Chinese domestic manufacturers now capture 57% of their own market, up from 28% a decade ago. Intuitive Surgical is the most profitable robotics company on earth, and it's not close. Fiscal 2025, $10.1 billion in revenue, up 21%. Gross margin, 67%. Operating margin, 29%. Net income, $2.9 billion. Free cash flow, $2.5 billion. Market cap, $165 billion. The installed base, 11,100 Da Vinci systems worldwide. Over 3.1 million procedures performed in 2025, up 18%. The new Da Vinci 5 placed 870 units in its first full year. The moat is not the hardware. It's the training. Over 70,000 surgeons worldwide are trained on Da Vinci. Switching to a competitor means retraining your entire surgical staff, months of practice with real patient risk. No hospital administrator approves that lightly. Competitors are finally arriving. Johnson & Johnson submitted Otava for FDA review in January 2026. Medtronic's Hugo received FDA clearance for urology in December. But both are years behind in installed base, training, and procedural data. ISRG's lead is not technological, it's institutional. 7 US listed plays. 1 industry. Very different risk profiles. Intuitive Surgical ISRG, $165 billion market cap, $10.1 billion revenue. The surgical monopoly. 67% gross margin. Symbotic SYM, $38 billion. $2.25 billion in revenue. AI warehouse automation with a $22.5 billion backlog, but 84% from Walmart. Teradyne TR, $57 billion. Robotics is only 10% of revenue via universal robots. The real driver is semiconductor test for AI chips. Rockwell ROK, $46.5 billion. $8.3 billion in revenue. Largest US pure-play industrial automation. Steady and cyclical. Fanuc FANUI, $42 billion. $5.3 billion revenue. 1 million robots installed globally. Robot division fell 16%, China and automotive weakness. Cognex CGNX, $9.3 billion. $994 million in revenue. Number 1 in industrial machine vision, the eyes of every robot on a factory floor. Tesla Optimus generates zero revenue today. Targets 50,000 units in 2026. The only US listed humanoid play. Everyone focuses on the robots. The real margin is in what goes inside them. Cognex sells machine vision systems, cameras, and AI software that let robots see, inspect, and sort. No debt. 642 million in cash. Gross margins above 70%. Every factory that adds a robot needs vision. This is the picks and shovels play. Teradyne's Universal Robots pioneered the cobot, a collaborative robot that works alongside humans without safety cages. UR has shipped over 75,000 cobots globally. But revenue dropped to 308 million, down 16%, under pressure from Chinese competitors offering comparable products at 40 to 60% lower prices. The choke point nobody talks about, precision reducers, harmonic drives, and cycloidal gears, are the joints of every robot arm. Two Japanese companies, Harmonic Drive Systems and Nabtesco, control roughly 75% of the global market. Neither is US listed. Think of them as the ASML of robotics, an invisible bottleneck that every robot maker on Earth depends on. Symbotic is the most aggressively valued company in robotics outside of surgical. Fiscal 2025, 2.25 billion in revenue, up 26%. Backlog, 22.5 billion, 10 times annual revenue. Adjusted EBITDA, 147 million. Net loss, negative 91 million. Market cap, 38 billion. The product, AI-powered autonomous robots that organize warehouse inventory at scale. The customer, overwhelmingly Walmart, 84% of revenue. Symbotic acquired Walmart's Advanced Systems and Robotics unit and is expanding to 400 last-mile centers. The bull case, 22 billion in backlog, converts into a decade of revenue. The bear case, 84% customer concentration with a company famous for squeezing suppliers, and at 38 billion, the stock trades at 17 times revenue with no profit. Goldman Sachs estimates humanoid robots could be a $38 billion market by 2035. Essentially zero revenue exists today. Tesla targets 50,000 Optimus units this year. Gen 3 production started in early 2026. Long-term price target, $20,000 to $30,000 per unit. A dedicated factory at Giga Texas targets 10 million units a year eventually. But actual 2025 production was in the hundreds, not thousands. In private markets, Figure AI is valued at 39 billion after raising nearly 2 billion. Aptronic at 5 billion. Agility Robotics has moved over 100,000 totes commercially at GXO, the most verified real-world output of any humanoid. The technical bottleneck is not AI. A January 2026 study found cognitive capabilities have surpassed the hardware. The real limits are physical, battery life of 1 to 4 hours, actuator heat management, and fine motor dexterity. For public market investors, there is no pure-play US-listed humanoid stock. Tesla is the closest proxy. Everything else is private or listed in Asia. My read on how to approach this sector. Franchise, intuitive surgical. 67% gross margin, institutional training mode, 3 million procedures a year. Not cheap at 165 billion, but this is the Linda of robotics. Competition is years behind. Picks and shovels, Cognex. Machine vision is required for every robot. No debt, 70% gross margins, recovering from a cyclical trough. The safest way to play factory automation without picking a robot winner. Cyclical value, Fanuc and Rockwell. Both in cyclical troughs. If global manufacturing recovers, these re-rate. If not, you wait. High conviction growth, Symbotic. 22 billion backlog is real. But Walmart concentration and 38 billion valuation on no profit make this a position sizing call, not a conviction call. Humanoid optionality, Tesla. Zero Optimus revenue today. If humanoid economics work, the market re-rates the entire company. Size for optionality, not for base case. 3 signals worth tracking over the next 12 to 18 months. First, ISRG procedure growth. If Da Vinci procedures sustain 15+% growth through 2026, the installed base flywheel is accelerating. The J&J Ottava FDA decision is the most important competitive catalyst. Approval would be the first real challenge to ISRG's monopoly in a decade. Second, Symbotic customer diversification. 22 billion in backlog means nothing if it's all one customer. Watch whether non-Walmart deployments appear in quarterly reports. If revenue concentration drops below 70%, the valuation story changes. Third, Tesla Optimus shipments. 50,000 is the target. Actual 2025 output was in the hundreds. If Tesla ships even 5,000 functional units to external customers by year-end, humanoid robotics crosses from concept to commercial reality. Watch quarterly earnings for Optimus segment revenue disclosure. My base case, ISRG continues compounding as the surgical franchise. Cognex and Fanuc recover with the manufacturing cycle. Symbotic grows into its backlog slowly. Humanoid robots remain a 2028 reality for most investors, regardless of what Tesla promises this year. I'm Big Z, follow me, see you in the next deep dive.